Hi, you have Sonali Basak here, financial correspondent for Bloomberg News and Bloomberg Television. I'm lucky today to be joined by Canada Pension Plan CEO Mark Machin and Chris Ailman, the CIO of CalSTRS. Collectively, the two of them oversee about $600 billion in some very significant territories. And so I wanted to start somewhere pretty close to home, and that's in California, where there have been major wildfires. Chris, I was hoping you can get us started here on what that's meant to you and how it's maybe made you rethink at all about your strategy.
Well, I have to tell you, I grew up in California, so we're used to fires in the fall time. The big difference I'm noticing now is that you're not getting the seasonal winds, so the air quality is terrible, and that's true across the entire western U.S. People now pay attention to apps that measure air quality. Our AQI, our air quality index today, is 175, which is unhelpful. This whole weekend, it was in the 200s. So you're not able to go outside. It's sad to say, but I'm hoping that wakes up people to realize that there's something more here to climate change than just a seasonal drift in the climate. We really need to get past the politics and have an honest discussion about a transition into a new future.
Mark, you're not immune to these problems. A lot of the smoke is affecting a lot of areas in Canada as well. How are you thinking about this issue of climate change more broadly?
I think climate change is one of the biggest risks of our generation and the next generation. It's a massive issue for all of us, but especially for what we do as long-term investors. So it's something we CPPIB put on the list of the most important things to focus on about 11 years ago, and have been tracking it and trying to really deeply understand what it means as a long-term investor.
Mark, I was going to jump in. You cover the whole country. And so, how does Alberta adjust when you have to change the way Canada sources its energy?
Yeah, this is a real challenge for the country. I mean, one way to look at it is no matter how brilliant all the ideas are that come out of this, this forum today and other forums, there's probably going to be a tail of need for some carbon-based fuels for some period to come. So if you look at the IEA statistics, for example, on their bullish projection on transition to a low carbon economy, by 2040, they still think 58% of the energy demand in the world is going to have to be met by carbon-based fuels. Now, let's hope it's a lot less than that. Let's hope that transition is a lot faster. When let's work for it to be a lot faster. But there are certain things where, for example, the physics of airplanes, it's very hard for them to fly with anything but carbon-based fuels until there's some significant breakthroughs. There's a need for significant breakthroughs in battery technology, et cetera, for base load to work in grids. So if you're going to have carbon-based fuels, then perhaps you want them from companies and places that really do try and have the best possible ESG standards in place. So they are thinking about the local communities. They are thinking about their governance. They're managed well. The region is managed well. And they're thinking about the impact of climate change. And I know you as well have been focused on methane emissions, for example. And that one of the major, methane is 84 times, as we both noted, 84 times more damaging to the environment over a 20-year time horizon than carbon dioxide. So engaging with these companies, and if you were investing in companies that are really focused on reducing their methane emissions and working with them to do that, then that can have a big impact. So that's one of the ways of thinking about it.
Speaking of some activism and active dialogue with the companies that both of you are invested in, I was wondering if you can give some examples, maybe starting with Chris, about what those dialogues look like. Can you cause a difference in the way corporate America manages their emissions?
Well, good question, because we have criticisms from groups that our engagement doesn't lead to enough change, but it is bringing about change. We're getting companies, Duke Energy, for example, to commit to net zero way out in 2050, which is too long, but they're starting now. So yes, we are making a difference in the companies we meet with and talk with. They're waking up, they're getting it, that if they want to be sustainable into the future, they've got to adjust and adapt to what they're doing. And the key word is adapt. And that's hard for a company to do, to shift their product line and to change the way they do things. But they're waking up and realizing they can't just rely on the past. They've got to change to go into the future. And engagement is an effective tool, not as fast as others want, but it's the best tool out there.
Mark, how about you? Are there specific dialogues that you could point to on how you're creating change among the companies you invest in?
Yeah, there are many. I mean, specifically on climate, I'll give one that's a little bit related to it, because some of these, we'll engage in a lot of companies on methane, as I said, methane emissions. So in the last, in the first 6 months of this year, we engaged with 26 different companies. We voted on 26 different climate-related proposals at shareholder meetings. The one other area related of engagement is on cobalt mining, which we've been engaged in for a number of years. And cobalt is one of the sources of battery technology for new battery technology, really important. And cobalt mining has had a lot of human rights issues in the DRC. So we've engaged with companies and other investors to try and make sure that the major suppliers of cobalt are doing it in a way that is not infringing on human rights and has best quality practices.
How are both of you grappling with the question of divestiture? Chris, maybe you can get us started on that.
Well, we deal with it every meeting because we get protests and public comment at every single meeting from Fossil Free California. And it really comes down to a decision about whether you think divestment is going to bring about social change. For us, divestment has to be an investment decision. And oil companies are really looking into the future. Some are waking up and realizing they want to be energy companies. Others, unfortunately, are still saying they want to stay oil companies. And those are the companies we're engaging with aggressively to get them to pay attention to that. Divesting is just a buy-sell decision, and that's what the activists have to realize. They've told us they hope that divestment will bring about social change because these companies will lose political influence. The reality is if we sell our shares, somebody else will buy them. And in fact, an investor who does not care about climate change. And we also have to recognize that the vast majority of oil companies in the world are not publicly held. So if you want to bring about change, it has to come at the government level. We can tilt our portfolio in or out of particular areas, but it's not going to materially change that area. And that comes from 25 years of experience being in divesting of certain industries. It has not brought about any social change. The question about whether you should own oil or not going into the future is just an active investment decision. And do you believe in the indexes and the market will be efficient, or do you want to be in active management and try and time it? And I know you've had Al Gore on. We've had him speak to our board. We're an investor in Generations, and they've been able to make money in other areas. We don't believe in active management alone as the only tool. We believe passive management has a role to play in a portfolio.
Mark, I know that this must be a difficult question for you too, given the energy industry is just so much of Canada's economy. How do you balance the idea of divestiture with activism?
Yeah, well, I'd say we don't have to invest in any sector. We're not under any pressure to invest in one sector or any other sector. We purely have a mandate of maximizing returns without undue risk of loss. So really managing that money for the long-term value creation. So that's the first thing I'd say. So we're very aligned with Chris. It has to be an investment decision, very aligned with CalSTRS. Secondly, though, as Chris said, a lot of these companies that are today heavily into carbon-based fuel and want to transition, they need capital. It's going to take capital. So if you starve the industry completely of capital, they're not going to be able to transition as quickly and as effectively. So I think investing in some of these companies, if they are committed to transition, it makes sense. So for example, I give one, Enbridge, the leading pipeline company in Canada. We invested in a joint venture with them a couple of years ago on their renewables. And so we invested in North America, renewables and European renewables. We've continued to expand that joint venture into offshore wind in Europe. Recently, we've invested more money with them. And I think it's a terrific cooperation between the two of us is really supercharged our renewables investments.
Well, in pure dollars, though, how much money are you putting towards the renewable space and as a percentage of your portfolio?
We're putting billions of dollars. So today we have close to $7 billion invested in renewables, and we have appetite for a lot more. Again, it's going to be investment return driven, so we have to find the right risk-adjusted returns. While the trend is moving in that direction, and there's a huge amount of capital investing in renewables, we've got to find the ones that actually have really good risk-adjusted returns. So we've invested in Brazil in wind and in hydro. We've invested in India in solar, and we've invested in North America, here in Canada, in wind and solar, and in the US. We just bought Patent Energy, which was a $6.1 billion privatization of a listed company in the US, which has assets in the US and in Japan. And then, as I said, we're investing in offshore wind in Europe alongside Enbridge and a number of different JVs.
Chris, what does that look like over at CalSTRS?
Similar kinds of numbers. We're in the billions. A lot of it is infrastructure. When it comes to clean energy, particularly as Mark mentioned, solar, wind, and the infrastructure to provide the generation or the power lines from that location in. The big question is going to be battery storage. We've been active with BNEF of looking at those options and where are there investment opportunities. But I totally agree, because too much of the discussion is hydrocarbons, yes or no. And I know we need to transition off of those, but even Bloomberg New Energy Finance, as Mark said, the surveys show that you're going to need some form of fossil fuels into the future, because you can't legitimately just cut off Texas and tell them to stop working and shut down their economy. That just won't happen politically. You've got to have what's called a just transition from one energy source to the other. And the first has to be electricity. The second needs to actually be in the agriculture space. And so for us, those are investment opportunities that we're trying to look at. And I totally agree with Mark. Many of those are now outside the USA, are very much economic, and the numbers work very effectively. We're looking for scale where the pension plans can team up together and do very large infrastructure investments to foster better energy sources.
So we actually have a question coming in from our audience, and they're pointing out that recent news about Nikola that had made false claims about ESG can show how the hype around this asset class can overshadow some of the more legitimate actions. How do the two of you kind of parse what's reality from what's hype? Are you facing a lot of misleading statements in terms of the companies that you both are investing in? Maybe Chris, you can get us started.
Happy to start on it. So I think one of the things I say is we prefer quantitative data rather than just statements of wish or policy. So the more numbers we can get, the more hard numbers that are really verifiable, that are ones that are consistently measured, and it will come back to this. But that's the most important thing that we look for. So verifiable numbers that are measured consistently. And one of the challenges is there are hundreds of ESG frameworks out there, and so we try to focus. It's interesting. I think we both focused on the SASB and also the TCFD disclosures. So both of those are ones that I think both think are the best in class standards. And if we can get more companies aligned with those, rather than, because it's a struggle for everybody. If everybody's reporting in different ways, then the numbers become less useful for us as we consolidate up all the thousands of securities we own and try and understand the risks we have. It's very hard if there are just hundreds and hundreds of different reporting methodologies. So before TCFD, there were, I think, over 800 climate change frameworks that existed. So trying to get people to go around at least one or two different standards across the world will really help here, and we'll sort out the hype or the exaggeration from the facts.
I'd add, Mark is so eloquent. I'm going to be very blunt. Talk is cheap, and we know that in the investment industry, loud and clear. Words really are meaningless. The bottom line, though, is that disclosure. That's what we're really looking at, is show us in actions. And I can't shout louder, like Mark said, at SASB, a common reporting framework that's material for each individual industry, and then TCFD for all companies around the world to give us a better picture of what are they doing about, scope 1, scope 2, and scope 3. That's really the key, is don't talk, but show us with actions.
I want to also, we have a very active audience here too, and we have another question coming in about an industry very near and dear to California, data centers. They account for a very significant amount of carbon emissions. As a CIO, Chris, how do you see that impact being mitigated? Where can big tech be leading the way there?
Well, I think that's where you really get into the question about battery storage. People have to realize that energy in California, particularly here in the summer, generally goes to below zero, to a negative price during the middle of the day when there's tons of solar power and hopefully some wind periodically. So it really comes down to battery storage at night. Our peak power time, instead of being noon to 5, is now 5 to 10 at night. So you've got to have alternative sources to store that. And really the key for us is going to be battery technology and then carbon sequestration. I know that's controversial, and right now it's darn expensive, but as Mark said, whether we like it or not, we're not going to be able to flip the switch and just move over to clean energy 100% immediately and destroy industries. There's going to be a transition, hopefully faster than is happening now, but you've got to find a way to sequester the carbon that you're generating for those kinds of things like data centers, and a better way to store it. And I think land use is going to become a huge investment area going forward. Long-term investments that are ideal for people like us that want patient capital, that want a long-term sustainable return.
Yeah, I might just add that, because I totally agree with Chris' comments on, I might give a plug for cold climates of where you put your data centers. So plug for Canada, move the data centers to Canada. I'm only partially joking. I mean, it's one of the things that I think Alberta should be, really looking. I know is looking at. The other thing is the efficiencies in running data centers. There's been I think a lot of press around companies like DeepMind using AI to really efficiently run data centers and reduce the energy consumption. So there's lots of really sophisticated AI and algorithms you can use to reduce that energy consumption. And then finally, on Chris's point about carbon sequestration, that's something that I completely agree is something we are very keen on. We've invested in something called the Alberta Carbon Trunk Line in Alberta, and it's now on and working and is pumping CO2 back into the ground. And that will, at peak, account for about 15 million tons of carbon, which doesn't move the dial on a global basis, 15 million tons of carbon dioxide a year, but it's the equivalent of taking all the cars off the road in Alberta. So it'll move it on a local basis. And this is an area of innovation that I think we're going to see huge amounts of investment in.
Now, I want to end on this because when we polled our audience through Twitter, they had said that when they're looking at ESG investments in their long-term portfolio, almost half of the respondents said it played no role. About 20% said it played a large part. So when you both are thinking about ESG as part of the overall portfolios, as again, that's about $600 billion between the both of you, where does it fit?
It's huge. I mean, it covers everything that we do. So it's top down and it's bottom up. So every major investment we make must go through an ESG screen, and specifically a climate change screen, to understand what the risks are and are we being paid for them. I mean, one recent example, again, which may be less intuitive to people, is we invested in toll road in Indonesia. And one of the key risks that was identified is, okay, what's going to happen with climate change? How often is that road going to flood? How often are the connecting cities going to flood? What's it going to do to traffic patterns? And we wanted to make sure that we really had modeled that, understood it, and we weren't overpaying for a road that might actually get impaired by that type of climate change. So it's one example of hundreds and hundreds where we have to challenge and understand. And ultimately, it's completely aligned with long-term risk-adjusted returns. It's fundamental for us to understand these companies. I don't think companies today can survive and thrive and grow unless they are thinking about how they're engaging with their customers, how they're engaging with their communities, what their long-term governance setup is. So from all of these perspectives, it's really fundamentally important.
Sonali, you guys at Bloomberg are good at cutting data, so I would take that Twitter poll and cut it geographically, because I bet though that the vast majority of that are USA, because when I talk to my peers like Mark up in Canada, I talk to people particularly in Europe, they absolutely get it. They're integrating ESG in every facet of their portfolio. The Australians absolutely get it. Even GPIF in Japan has started to integrate ESG and the SDGs, Sustainable Development Goals, into their investments. On the West Coast at CalSTRS, ESG is in every part of our portfolio. It is involved in every investment decision we make, particularly when it relates to climate change and governance. The social issues are a challenge because those really are varied. But right now, very paramount, obviously, is diversity of thought, diversity of the team that you're doing business with. So for us, ESG is integrated into every investment decision and is absolutely critical to what we're doing.
Something you had mentioned earlier that I want to wrap back around to, Chris, was the idea that government needs to be doing more, that they need to be playing a bigger role in order for the investment part to work out. What does that look like? What do you need the government to be doing to step in for some of these initiatives?
Well, it's a global problem. So you need to have people working with the Paris Accord. You need France and the US in the Paris Accord working with China. The energy demands and the food demands are going to be in Africa and in India, and that's going to require energy. So how we meet those needs is really going to be paramount. And it's a global problem, and it's got to be a global effort. You can't have individual countries like ours back away and start and stop, start and stop. That's not an easy area to invest in. You can't anticipate government regulations. It has to be in concert. The global capital, I can tell you, is there's a ton of global capital, and it's very interested in long-term sustainable projects if there's the right environment from a government standpoint in terms of regulations to facilitate that. And hopefully that, with the fires here in California, it really impairs your quality of life when the entire West Coast can't go outside for weeks at a time. And people will start to wake up and accept regulations and change. But right now, that's just become a political fight, which is very unfortunate.
Mark, has regulation caused you or stopped you from making investments in the space?
No, I think the challenge with any long-term investment is the predictability of the regulation. And I'd put tax in that bucket as well, predictability of regulation and tax. Because when you're investing in these projects, that they are by nature, you're putting capital into the ground for the long term. And what you don't want to happen is in 2 years' time, or the regulation changes, and you've got terrible returns from your investment. And that's the real challenge. Is we only want to invest in places where there is a long-term predictability of the regulation and long-term predictability of tax policies. And that is challenging, particularly with the fiscal pressure on governments today, and the political change in countries. It's difficult to. There's a very narrow set of countries where you can have that long-term predictability. And some of the biggest losses we've made in infrastructure have actually been made in the most developed and most advanced countries where policy just changed overnight, and we were caught by it in thinking, oh well, it's not an emerging market, it should be predictable, but it hasn't been predictable. So that's something we have our eyes really wide open on. So if people, long-term predictability of policy, a path to how you're going to, for example, price carbon. And if you're going to price carbon, trying to have a long-term path towards it would be really helpful.
Speaking of state and local governments, we are getting another question from the audience about municipal bond investing. Given the enormous infrastructure needs of so many local governments, what are your thoughts around the municipal bond space with respect to sustainable investing?
Well, from our perspective in California, municipal bonds are the lowest cost of capital for any kind of a public project. They're great at building things. The challenge, though, is municipal bonds aren't great at sustaining and maintaining a facility. And what we have found is they build something, but then the government cuts the repair budget and the management budget of it, and then it falls into disrepair. So there's got to be a nice balance between municipal bond financing, but then a role for private capital to come in, because we're tax exempt. So we're not interested in those municipal bonds, that we can come in and maintain that project for the long term. That's really the goal with this, is that you've got facilities that last 30, 40, 50 years. That matches our liabilities. I've got a 30 to 50 year liability. So I'd have an interest in maintaining that physical plant and keeping it operating for a long term.
I know both of you had also been big players in the green bond market as well. Mark, maybe you can get us started on kind of what success you're seeing there among investors.
Yeah, well, I'd say we really participated from an issuance perspective. So we do issue bonds. I think we were the first pension fund to issue a green bond back in 2018. We've continued to issue. We really have found terrific pricing. So it's not just simply that we have a really good use of proceeds in the expanding renewables investments that we have, and also the environmentally friendly building portfolio that we have. But it's also the fact that it's really competitive. It's been a terrific market for us to issue in, and so so I think this is this is a market that more people should be using. I think the stats is only it's less than 4% of bond issuance today, but I think that will probably be a growing market, a rapidly growing market, and around the world. I think China was at the forefront of developing their own domestic market here in green bonds, but Europe's really been the leader in terms of appetite.
And I have to say that the World Bank would love to see those bonds trade at a premium because they have some green features. Right now they're trading at par, and so I think they are attractive, because over time I think there will be an interest of investors. Maybe not a dedicated allocation just to green bonds, and we have a green bond portfolio as part of fixed income, but I think you'll start to see ETFs and other products that create retail demand for green bonds, and therefore you do get potentially some premium pricing. Boy, a little bit lower rate in borrowing is going to encourage companies to take their projects and wrap them in a green wrapper. And of course, we have to have good standards to make sure they're green, but that's going to be a much more effective way to then raise financing for those kinds of projects.
And before we leave you here, I want to be able to give both of you the chance to let us know what you think in the next 5 years, what your biggest opportunity in green would be. Mark, what's your outlook for your more than $300 billion pension fund in terms of going green?
I think there'll be a lot more investment in renewables of all flavors and all geographies. But the other thing we touched on it a little bit, I think, is the innovation that's required in this space. So innovation has to be part of the solution. I think Bill Gates said that the other day. And so we're looking at investment in all types of battery enabling technologies, charging, and all other types of innovation, including carbon sequestration. I think we're going to see a lot more investment in those areas.
My key word is adaptability. Our portfolio is used to just being passive and following the market, but we're going to have to adapt. The world is going to have a low carbon future, and markets and investors have to adapt to those sudden changes that they're not used to seeing.
Thank you both. We will be keeping an eye here at Bloomberg News as we watch those data centers move to Alberta, Canada. Both of you, please stay safe. Thank you for joining us here with Bloomberg Live, and thank you to our guests for joining us.